Welcome to Trading Lounge and the US indices. We'll look at the S&P and the NASDAQ. And with the S&P, as you know or may know, that we have a handful of counts for the S&P. Now, that's not a problem because the internal wave structures for all our alternative counts are all the same. It's just in one of the larger degrees of structure that things change a little bit. So first of all, we've got this bullish count here that we're looking at, and we can see that we'll have wave 3 finished here with an A and a B and a C and a D and an E wave here, triangle, Elliott Wave triangle for wave 4, and that's fine. And then we have 5 waves up for wave 1 here, and then we're looking for a move back to wave 2 here. Once that's completed, we'll look for a strong wave 3 to the upside. So that's a valid count. The other valid count that I'll go to will be on the 3-hour chart, I think, or 4-hour chart. No, but this is another count too. So this is one where the top of wave 3, the A wave, the B wave, the C wave, and then an A and a B and a C for the D wave here, and then an A and a B and a C wave here. And not that this is much different from the bullish count either, because we're still going down to this 61.8% retracement level here. It's a possible count, I can't rule it out, but it's there. So it may be the 4-hour count that we're looking at. Yeah, so this one here is a more complicated triangle pattern, and in this instance here you can still see that the triangle pattern is not completed yet, and we still need to work through that. Now, the internal structure for this in the short term is much the same as the bullish count. We're still looking for a move down into the 61.8% mark here. So we were looking at this first leg coming down through here in all of these counts as being an impulse wave, 5 waves, and then we're looking for a corrective wave, which we've got. And then last time we spoke, we were looking for, on the Friday, we were looking for short trade setup. So we had, a various amount of different ways we could approach this here. So I think it's probably good if I'll just drill into, this is just the hourly chart here. We'll go into the tick chart in a moment. But with this count here, we were looking at this as a bullish count here in terms of 1 and 2 and 3 and 4, an extension in the 5th wave here. This count here too is also sort of not quite comfortable with this because of this long 3rd wave here, long 5th wave here, which can certainly be a 3rd wave. So I think maybe it was a 2-hour chart. I don't recall. Yeah, okay. So this is just another alternative. And it's not that we're going to miss anything either, but in this count here, we're looking at this as wave 1 and 2 here, and then 1 and 2, and then having this as the 3rd of the 3rd here, and then looking at this as an A and a B and a C wave here, pretty much staying above the 2700 mark there, and then moving higher from that point there. And like I mentioned, it's not like we're going to miss it. So we had this high here initially in case that moved up through there, and we would have been long on 2730 because 30 is the top of subgroup 1 of 10, 20 and 30 of 2700. So we can move this one here down into this sort of space here and look for that sort of setup there and just drag that out a little bit here. There'll be a bit more to that, but just saying that we don't want to miss any upside, but at the same time we want to be short, so we are short at the moment of this. So then if we move into back to the hourly chart here, just to finish this off a little bit. So as you know, even though I'm looking for wave 2 here in the bullish count, at this 50-60% retracement level, it's also possible that this A and B and C just may finish on the 2700 there and move up, and we need to be diligent for that. But we're looking for a move to the downside, and the way that I see that is this is wave 1 here, wave 2 here. So wave 3 will come down here. We'll see wave 4 do its little dance at the 2700 area before dropping lower here. Will it come all the way down to the 61.8%? I don't know. Will it just come to the 50? I don't know. Will it just come here and spike up? I don't know. We'll see the length of the third wave and how that pans out and what's driving that, and then we'll get a bit of an idea. But certainly being on the short side of the market is the go. So on the tick chart here, and I might just have to bring that up into some more units here. So this is our correction here, so an A wave and then the B wave up here, and then we're looking for the C wave moving further down. Now in that move to the downside, this trend line from here, channel from here to here and then put onto here, gives us a bit of an idea where we could be floating down to here. Okay, so that will be on that side. On the upside here, these trend lines here, long as we're staying below that, you need to be holding your short positions. Okay, we talked different ways of being short in here. You know, there's a lot to talk about, I guess, but I mean, just some of the main points here. The market has been breaking new lows. It's been breaking, you know, intraday trend lines and so on through here. But what I want to point out here is just the trading levels scenario. So we know that normally I'd use the dotted line in orange here for a 72 number in group 2, but in this case here we've got 2720. It may have been 2772 or something, but the 2s and the 7s together just seem to carry more weight, and we can see here that the market broke support and then became resistance here. So we're on the right side of the market. We're on the right side of the most important number at this particular, in this particular space. Obviously the 2700 is going to be important as well. However, in this case, where we are at the moment, this is we're on the resistance side, so we'll be on the short side, and that's good. So in the count, from wave B here down to wave C down here somewhere. Where are we? Down here, wave C. I might have to move that across a little bit. But the point here is that I can't draw on this side of the price, but we have wave 1 here and wave 2 here. And then we've got this move down here, which I don't really want to call wave 3 here, even though it's in 5 waves here. Because wave 4 here really overlaps wave 1 here. So the thing here is that would have to call this wave 1 here, wave 2 here, then down for wave 3, 4 and 5 just for the third wave, then the fourth wave dance across the 2700, and then wave 5 down. If I've made a mistake in here, right, it's always good to look at. If I've made a mistake in calling this maybe an ABC correction here and I've got it wrong, and this could be an impulse wave and I've got it wrong. So then that leaves us, it's just good to look at these things. Then it leaves us, if we've got this move up here, then we've got this down as an A wave, a B wave and a C wave here. Okay, so we could, you know, we could pretty much maybe consider this an A wave in here, a B wave in here, and a C wave on this low here in 5 waves. So if that's correct, that would only be I'd only be able to confirm that if it took the B wave high out here, because then it makes it an ABC correction. Okay, so then beyond that or before that, the risk would be, well, if we go long, where would we go long from? Well, we will go long if the 2720 became a nice tested support, and you wouldn't trade it straight up. So if I have to draw over this side, so the market has come down from here. If it pushed up from here, we still wouldn't go long on the breakout here. It would have to wait for it to fold back in here and, you know, give us that setup on that level there, because it could just come back as an A wave, a B wave and a C wave into the trend line here and then go down from there. So it might spike up through here and then come back down. So it really needs to sit on there as a solid move in that space. Okay, so it's, you know, if you've got a choice to push the button or wait, then the question will be that you need to ask yourself, has the 72 number, has it been tested for support, or is it just simply trading above it? Now, The NASDAQ has got a slight different count, and I just thought it was a bit more sort of bullish. And in this case here, we're looking at it because this low here, I can call this wave 1 and nice A, B and C correction here for wave 2 here. But on the S&P 500, this low here was below this one here, so we couldn't call it like that. So in this case here, you know, on the S&P, we're calling this 5 waves up here, which we can do on the NASDAQ. But here we've also got this one here as well. But the thing here is that we just really want to see the move come back down to the 50-60% retracement level, which is a bit lower than that there. So I don't know why I've put that there. So we could put that down into that space there. One of the main points here was to be short from last time. The thing here though is that, clean that up a little bit, the 6.8 is going to play out as a pretty strong support level here. So it was probably a good idea to take the money off the table at 6.8, okay? Even though it can come lower, and if it does come lower, then we might be able to look at it depending on where things are, but you know, we need to really give that some thought. So let's just one step at a time. That's our target, the 6,800. I won't bore you with the bigger wave count or the other wave counts. It's in line, it's all going according to plan. Let's just see what we've got when we get down to here. And we can be looking at this as an A wave, a B wave, and then 1 and 2 here, and then the same again, 1 and 2 in here, and 3 and 4 and 5. So you know, it probably come lower, but at the same time, it will be like this here. It will be choppy in here. So it's just taking up anxiety time. So you're better off taking it at the price and moving on and doing something positive in a chilled manner. All right, thanks for tuning in. Cheers.